Hey y'all, what is up? Welcome to episode 47 of Stock Talk with Josh and
Who else?
I don't know. Maybe I don't know. I might let me take a guess though. It might be Zach,
No, not Zach.
Steve. You know you do kind of look like a Zach though.
No, I don't think so.
I think you kind of look like a Zach or Steve or John. You look like a John
Or Niko.
or Nico. Yes, Josh and Nico. So Nico, what's up? How you doing?
I'm good.
I know.
It's been a long time since we've done an episode.
I know at least a month. So I'm sorry about that, but
At least a month since the episode, and at least 3 or 4 months
since you've been in the studio, yeah.
since we've been in the studio.
Yeah, this past month of March was kind of busy with high school basketball going on, plus my other job, so kind of busy stuff. And then you were out in Florida, and you're finally back too. So
I'm
how was
finally
Florida?
back. It was good. It was quite an experience.
Anything interesting happen?
Yeah, I went to the hospital.
What
That was
happened?
the interesting part. Well, I had this weird pain in my side, and I went in the hospital, got tests done and stuff, and it turned out I was fine.
Okay, did they have an AI look over you and
No,
see
I
what,
don't think so.
what the problem was?
No, I don't think so.
You liked that transition though, didn't you?
Oh yeah.
So I guess well
Speaking of AI,
yeah. But real quick though, let's talk about some stocks that we've been getting into first, kind of.
okay, you go first.
Well, okay, that's fine with me. But I've been kind of scared, like I said last episode, been kind of scared. But I actually brought it back into Amazon. I sold it
Okay.
like around. I actually originally bought it like right after the split. It's like around 112. Like
Hmm.
sold like half of my shares at like 1.9, 110. So it was just about even. Then I bought back in a couple days ago when it was like around low 90s, like 92, 93. So yeah.
So that ended up working out. You saved yourself a little bit there.
And I think it's back up now too, like back
A
to the
little bit
one.
over 100, yeah.
Yeah, so it's been a good investment for me too. Some other companies, another company I've been kind of looking at is you actually think I'm crazy because of this. What's the one company name?
Palantir.
Palantir. I'm starting to kind of look into that more because, like we just said, with the AI stuff being more and more,
Hmm.
and Palantir being probably the leader of all of
Yeah.
those things called AI. I'm thinking like, maybe this should be kind of a good price point for me to go into too, because of with it being at $8 as well.
Yeah, I think it's a good, as far as the company goes, I think it's a great company. I just don't like the side of it coming from, like, I guess, an investor standpoint of, like, the metrics as far as, like, how high of a ratio it trades at, how high their stock-based compensation is, stuff like that. But as a company, what they're doing, the technology, everything, I think you can't go wrong there.
Yeah, but I think you probably just bought it at the wrong time.
I
But
bought it at the wrong time because I bought it when it was trading from $20 to $25 a share. I bought it at like 18 or 19, but it's because I was caught up in that whole frenzy with Kathy Wood, where everybody was flooding money into those Kathy Wood ARK Invest stocks, and I fell into that. And yeah, I bought into Palantir too much. You gotta look at things when you have money losing companies that trade at $40 billion valuations. That's a problem. That is not something you should buy. But I didn't realize that until I lost half my money with some of these investments. So learn my lesson.
yeah, but real quick, I do want to. I know you're a big fan of ARK Invest, Kathy
No,
Wood.
not anymore.
Thank you, thank you. I just wanted to know like how you feeling now because you used to be big on top like man she's
Yeah,
going up. You believe in her? Like what's changed?
I
Really?
think I gained a lot of confidence in her because there was only a couple YouTubers back in 2019. It was a couple YouTubers, and it was pretty much Kathy Wood and Ron Barron. Those were the two.
Oh, man, yeah.
Those were the two like hedge fund people who were bullish on Tesla. And then there was a couple YouTubers. Everybody else said they were bearish on Tesla. And so I really bought into it. I made Tesla by far my biggest position in my portfolio, like way outweighing everything else. And then, as a year or two went, like as we went into 2020 and everything, Tesla went up 2,000%, I was like, okay, this just proves my point even more that Kathy Wood is a great investor. But now, as we're looking back 3 years later, and the rest of Kathy Wood stocks that I bought into, DocuSign, Palantir, Skills, what else? Block, there's a whole list of them. There's a bunch of them. Teladoc Health is a great example because I lost a bunch of money. All those companies, they were growth companies, and yes, she has her points of like these companies are disruptive innovation companies, which I can still see that, but that doesn't mean you should be paying 20 or 30 times sales. That doesn't make it a good investment. So nowadays, looking back, I've realized that there's other things to look for in stocks. It's not if you have a money losing company that trades at super high valuations, even though they have potential to disrupt in an innovative way, that still doesn't mean you can buy in at any price. Because now you see things. We were in 2020. We were looking at a stock market that was super inflated, and there was a bunch of money, flowing into stocks. And now we're in a totally different economical environment.
True.
So things are different now. You got to be more cautious, and sometimes you can't just jump into any stock you want at any price.
Yeah, and my biggest problem with Kathy Woods is that just people thinking like she's God.
Yeah.
Kinda. I didn't never like that because ARK Investors, if you think about it, the stock has probably been at the same since 2018, 2019. Has barely had any movement. But for some reason,
well, it had that huge spike in 2020 and 2021 when things were super hot.
yeah,
It came crashing down.
just like everything else, though.
Yeah. And it's because it's because when your portfolio is made up of all those overinflated stocks, that's what happens. Teladoc, or same thing with what's the bicycle one that was hot during the pandemic?
Oh,
Not Palantir.
no, it starts with a P though.
Starts
Doesn't
with
it?
a P.
Uh,
It's something like that.
I know you're talking about, yeah.
Not Pelodoc. Something something like
Peloton,
that.
something.
Peloton. Peloton.
Yeah, Peloton.
That's another example. Stocks like that, they went up, they jumped up 500, 300, 400, 500%. And it's not justified. That's it. It was not justified. It's one step away from becoming a meme stock like AMC or GameStop. It's pretty much the same thing. It's just those valuations get pushed up, and Teladoc should not have been trading at $250 a share, because today it's $25 a share. That's why I'm down, who knows, whatever, 70, 80% on it. So it's stuff like that. You gotta be careful. You gotta learn your lesson on things like that.
Yep. Well, let's keep on going. Now let's actually start steering the conversation more into AI. So, and we all, I guess, it's about everybody knows ChatGPT, what's going on with that, and this new article is saying there's a lot more jobs that are going to be getting replaced because of ChatGPT. And even like you said, our one friend of the show, Walter, even said his job has completely changed with ChatGPT as well. So with ChatGPT just starting about the past month or two, how do you see the entire overall industry is going to be changing now?
Well, I think we've talked about AI before, but it seems like now it's moving a little bit faster. Every week, every couple of weeks, we see something new come out. Like last year we talked about AI. And there wasn't any huge developments though. Now we're seeing things are developing super fast. Every week we have a new update. We got a new company coming out with something. So that part is interesting. There's also, I don't know if we discussed this, but there was a petition or something signed recently by a bunch of investors, including Elon Musk and I believe somebody else. And they're pretty much asking for any AI service that's more powerful than ChatGPT 4, which is the newer, updated one. They want to put all that on pause. So if you read the article, it makes it sound like they're like worried that AI is going to become too powerful or going to take over, or it's just like we're kind of just like messing around with things that they make it sound like it's like a nuclear reactor or something, or like something crazy that we can't control. So,
well, did they all always do that with something new technology wise?
Kind of, but I mean I wouldn't say that about. Think about what about the internet? They didn't really do that with the internet, right? The internet just kept rolling and progressing and becoming more and more, right? They didn't like regulate. We still don't even really have that much regulations for the internet. Like we still are missing that. So I think that's what they're asking for. And like maybe he's right. Like maybe the world turns into Terminator or Mad Max or something. But on the other hand, part of this kind of seems like Elon Musk is doing this for a personal or financial gain regarding like his own companies, because for one, he has his own AI company and AI products that he's working on, right? Not only that, but if he's really concerned with things like this and with new technology being a risk for people, what about self-driving cars and all the other things that he does that are innovative technologies putting people's lives at risk? So,
are you saying it's starting to get a little bit hypocritical?
It's crossing the line of being hypocritical, yeah. So I don't know. I can't tell. I mean, I don't know if that's a smart move. I don't know if it's smart to say, okay, everybody put things on hold. We don't want AI to get any more powerful because it might be a risk. I don't know about that. I think it's just Elon. Oh, I know who else is on there. Steve Wozniak, the guy from Apple. So I don't know about that. I think we should let it keep going. I don't think we need to. They should worry about regulating the internet before they worry about regulating AI.
Yeah, and you see, Microsoft is already trying to start up a competitor with them too.
No, you mean Google?
No, Microsoft too, with the Bing AI too, but Google as well.
No. Well, no, because Microsoft came
Has
out
a Bing AI chat actually.
Yeah.
Bing AI chat. Yeah.
But isn't that? I think it's using the same technology from ChatGPT because that's what they invested in.
Yeah, you're right.
So I think it's the same technology as ChatGPT. I have not used the chatbot for Bing yet.
And I haven't used the one for Google yet either. Yeah.
I mean, I'm sure it's just like ChatGPT, right? It's just in the browser.
Mm-hmm.
And I guess what that was supposed to do was because I think Google has like 92% market share of searches on whatever for any browser. I think Bing has like 3% or something. So I think that was supposed to pull more people into using Bing. I don't know if that's really going to make that big of a difference. Depending on how well Google's service is. I think even with that AI chatbot, I don't think we're there to totally replace searches like Google searching. I think they're going to be used for different things. I think.
So you don't see any world that ChatGPT or any type of open AI is going to replace Google at all?
Totally replace it? For one, Google's coming out with their own. Google will have their own.
Mm-hmm.
So I don't think Microsoft's is going to be that much more better that people are going to be like, okay, I'm going to switch to Bing. I'm not using Google anymore. I don't think that's going to happen. And I think the way people use a ChatGPT type of technology is going to be different from how they use Google searches. I think some people are going to want to have multiple different options and things to, different websites to click through. So I don't know. We'll see.
I still feel like, because like we're creatures of habit.
Yeah.
Like I feel like if one person like trying to goes one way, it's gonna be majority of us gonna go that same way too.
Yeah.
So if ChatGPT is the mainstay, we're all gonna go ChatGPT.
I don't know. I don't know if Chat. I think it's almost like the way we use Google search now. I think it's almost been more. It's almost a more proven model where like we get more accurate results almost. So like I think it's going to take some time for ChatGPT to get some data.
Oh yeah, of course, yeah.
Get some data in the system to give more accurate results. But I don't know. I mean, we'll have to see what happens. But I don't think Google's going to have too much of an issue. I think Google's going to be able to keep up just fine. As far as taking people's jobs and stuff, I mean, for one, it's definitely making, like how we talked about Walter's job. He said it's making his job easier. He's more productive and stuff. As for eliminating people's jobs completely, I did read an article about a.
Yeah, I actually have it's like a list of things.
What?
Jobs that that AI will most likely replace.
Yeah,
and they're saying, what's the first one? Media jobs such as advertising, content creation, journalism.
I don't see
legal industry jobs.
I don't know about content creation.
It says media jobs across the board, including those in advertising. Yada yada, may be affected. Yada yada yada.
Yeah.
Analyzing and interpreting vast amounts of language-based data and information skill that you expect generative AI. Okay, we know that. So
the other thing me and Walter discussed was, as far as not only if it, let's say AI already has these skills, right? So people aren't going to be using these skills for their jobs anymore. Like let's say it says write an essay, summarize these points. Even if we're talking about like we're going to bring up Adobe later, but if we're talking about how AI can create 3D images and artwork and stuff like that, then the question comes back to, are people or kids even going to have to learn these skills anymore? Because I think I've heard some schools out there are working on trying to totally eliminate and ban things like ChatGPT for their students, because the students are just they're not going to know how to write anything because it's all going to be done by ChatGPT. So
I think in general, a lot of elementary school kids, like, they need to change the curriculum.
Yeah, of course. I agree. Of course they do. But I mean that conversation is always going on. I don't know. In regards to AI, I don't know if. I guess that means that the future of the next generation is not going to be too great of writers, because really they don't have to be. You don't.
You don't.
You don't have to be, right? So I mean, it's kind of a good and a bad.
You don't have
thing.
to write in cursive anymore. Like who
Yeah.
really writes in cursive besides if you go out to a restaurant and just sign it real quick?
Yeah, I know. Which I think that's a bad thing too. I think you should write in cursive. Like I think that's your signature. That's your signature. So there's always a debate about what you should be learning in school, what's important or not, what are you going to actually use, all that stuff. But as far as learning skills like writing, I don't know. I mean, I think it's a good thing if you're talking about being like as far as like in a business sense or like financial sense. Yeah, you're going to be more productive, right? Instead of you having to write stuff and summarize and read stuff, AI can do it, and that's great for productivity. But as far as like just being a human being who has skills to write, summarize, and read and stuff, well, you're not going to, I guess the next generation's not going to have those skills as much then. So in that sense, it's not good. But I don't know. There's different ways of looking at things. That's just, I guess that's just how technology works.
The next topic I want to bring up this past week or and a half in the news has been, I don't know, kind of like fear mongering a little
Okay.
bit. But this just happened. It says Saudi Arabia has entered a trade alliance with China, Russia, India, Pakistan, and a few other countries to use the Chinese dollar, like the
The
yuan dollar, instead of the U.S. dollar. So we all know the U.S. dollar is like the main reserve dollar for
Yeah.
all different companies, not companies, but countries to use for any type of trade, things like that.
Yeah.
Yeah, but those first two countries I said, China and Russia,
Mm-hmm.
saying them being a partner of do anything, that's always going to be kind of be scary for everyone.
I know.
Especially with the American media pushing this, China Russia thing going on. But I think this news is not really much to do. Like I feel like it's much more important things that us as Americans can deal with, besides with Saudi Arabia doing this thing or linking up with China Russia.
Yeah, I mean, if anything, it's gonna make the dollar weaker. I would think, right?
Well,
It's gonna make the dollar less important.
I think the dollar is actually now like the worth of it is like higher, the highest it's been in like 20 some odd years that they were saying.
Really?
Yeah.
I don't know about that. I
Yeah.
mean,
But the U.S. dollar is still the reserve dollar for the entire world.
yeah, right.
So I
Right.
still don't think it's gonna stop anytime soon or anything like that. So
I mean, the other way to look at this too is how you said about like, seeing China and Russia work together on something. Like, what does it say about Saudi Arabia, India, Pakistan?
yeah, but
You know?
Saudi Arabia, I think we still have a good relationship with them,
Okay.
and they're still an independent nation. They can do whatever they want to do.
Yeah.
Oh.
And I guess, it's also gonna, I don't know. I mean, it's gonna be up to how is China's economy doing?
Yeah, but
You know?
they're saying that China government should have passed us in by the year 2030. So
Really? Pass
Mhm.
us in terms of GDP?
yeah, it's just being overall the
A bigger-
leader. Yeah,
Huh. Well, we'll see. I don't know about that. I don't know.
I guess we'll see.
I don't think it's completely clear yet. I think
I'm staying away from Chinese stocks though.
me too. I 100% am. I got rid of my Alibaba.
Oh, that's good for you.
Yeah.
You sold at a loss.
Yep.
How
Huge-
much?
Huge loss.
30?
30%?
Yeah.
More than that.
Holy shit.
Yeah, probably more than that. Well, no, probably like 40% or something.
Okay.
Yeah, not good. I mean, they got too many problems. It's not the same. It's not the same experience as investing in U.S. companies.
It's not. Yeah.
It's a totally different experience, and it's a totally different level of trust. And
Different
it's-
rules and guidelines that companies have to deal with in
Yeah.
the United States compared to China.
And it's a totally different level of unpredictability. It is
Yeah.
it is much more unpredictable. So I dealt with enough unpredictability with Kathy Wood. I don't need to add in foreign investments as part of the equation too. So I'll stick with my U.S. companies that, because we got enough factors going on over here with politics and the government and laws and regulations and business trends and stuff. Like, I live in America. So I can keep my eye on how things are, what they're like over here. I don't know what it's like in China. So that's just taken, one step further, and it just makes it more risky. So
Yeah, and while we're actually talking about that, Congress right now, well, since I don't know when, is now having an
while.
intense debate over the debt ceiling. So,
Yeah.
Nico, what are your thoughts about it?
Well, they probably need to do this. They need to do this. I think the money they make from tax dollars is going to have an effect on this. So that's definitely playing a part. And I think the other thing is that this also is going to tie into our next topic, which has to do with banks and interest rates and people wanting to get their money out and people investing into treasury bonds, all that stuff.
And I will say Republicans just well, they want to cut like $1 trillion in spending.
They want to cut $1 trillion?
Yeah.
Okay.
And they just introduced says right now they introduced a bill. No, 500 bills to do so. That's a lot of bills.
Why do they not? Why do they not want to raise the debt ceiling?
I don't know. I don't know.
Because one side is saying they don't want to raise the debt ceiling. I don't know.
One do, but I feel like they always raise the debt ceiling anyway.
Yeah.
They've been doing that for years.
They've been doing that for years. I guess I don't know. I don't know what the argument is against to not raise it, but from what I heard, they won't be able to pay back their treasury bonds if you don't raise the debt ceiling.
Yeah, but at least they have money to give to Ukraine, though.
Yeah, I know, right? I don't understand what the point of the debt ceiling is. So the point of a debt ceiling means a cap,
Yes.
right? It means your limit.
Mm-hmm.
Okay. Well, that's like saying I'm going to give myself a budget of $100 to spend on entertainment every month. And then every month you just up it $50. You say, "Okay, well, now my budget's $150. And the next month, well, now I'm going to allow myself $200. Well, then I'm going to allow myself $300. That's pretty much it eliminates the point. I don't understand. So
yeah, but this entire stuff is going on is going to be some good entertainment to watch.
Yeah, it is.
With McCarthy and Biden, it's going to be nice.
Yeah.
Nice entertainment, shall I say.
Yeah.
Yeah, but let's keep on going.
We'll see. So this kind of leads us into this also is related
This
to
is probably the biggest news that's going on right now.
Yeah,
well, one of them.
This is probably number one, right up there with AI, if not more important than AI.
Yeah.
Is the banking crisis right now, and how we saw a couple banks go under, a couple banks almost went under, and that's what people are worried about right now because it's a combination of two things. One, the banks have a lot of unrealized losses on their balance sheet from investing in bonds when interest rates were low, and number two is the fact that people are trying to get their money out. So it all started with SVB, and as soon as people went to get their money out, the CEO came out and said, "Okay, you have nothing to worry about. Don't worry." Well, that actually made people more worried, and so it was that partnered with the fact that companies like SVB, or banks like SVB, bought those bonds years ago when interest rates were low, 1%, maybe 2%. Now interest rates are 5%. So what does that do to the bond value? Well, that lowers the value of the bond by a significant amount. So it's that partnered with the fact that when people go to get their money out, these banks, we're going to go over liquidity ratios, but these banks do not have all the deposits sitting in cash to pay back the borrowers. So these banks either have to sell their bonds for a loss to get liquid cash out, and that's really where that's the main issue. The other option is they can wait until these bonds mature, and then they don't lose money, but then they need cash right now. So that's where the big problem is with this.
Yeah, very true, very true. But like you were saying for the second thing, people taking out too much money or taking money out too fast, things like that.
Yeah.
I still don't think that's a problem for people to want to take their money out, especially with a bank that's kind of looking at the news as somewhat at risk.
No, it's not a problem. The problem is okay, if you want it to be easy for people to take their money out at any time, how are those banks going to make money?
Yeah, very true.
Mm-hmm. Those banks have to make money.
I feel like that's the issue with the smaller banks. Now, I feel like these past couple months we were talking about, do we even really need a bank besides the couple big ones because of different things such as Cash App, things like that, online banking type of stuff. So the use of maybe like a different small banks that we go to, that might be weeded out the next couple of years. So.
Okay. That's an option too. I didn't think about that, but I guess that's an alternative. So you mean things like Ally Bank? Like where it's all digital. It's all digital.
Yeah.
I guess that would there's some potential there.
But there still is some use for different like brick and mortar stores such as, and that's probably where the big banks are coming at.
Like Chase and stuff like that.
Yeah.
Okay, I guess the way, if you want it to be easy, if banks are going to make money and you want it to be easy for I mean, it's not a problem when we go to the bank to take money out, unless everybody wants to go and take money out of the bank.
Yeah.
That's when it's a problem.
And
So,
it's different when we want to take maybe $100, $200 out.
yes.
If we want to take out, okay, one person wants to take out $5,000.
Yeah.
Another person wants to take out $12,000.
Right.
Yeah.
I saw an interview where this guy wanted to take out $250,000, and
That's crazy.
he wanted to take out $250,000.
Elon Musk couldn't take out that much when he wanted to buy Twitter.
Yeah, that's true. That's why I sold all my Tesla
Yeah.
shares. But I saw this guy wanted to take out $250,000, and he said that they had to schedule like an appointment, and it took almost a month for him to. He had to go at the bank. He had to like go through some process to go sit in the parking lot, wait for the truck to come, and deliver this money in multiple different. Like they had to go like $50,000 at a time or something. So it's a big process. And once you start talking about six figures, taking that out of the bank, that's where it's an issue. But I mean, it's almost going back to like the Great Depression. It's only a problem when there's a line of people lining up at the bank to get their money out. If it's just that's why the banking system is built on. That's why they say it's built on trust, because if you have confidence in your bank that you can go get money out whenever you want, it's not a problem. It's when you start losing that trust. So I guess I don't know.
So do you think that was a bad decision by the banks
To do what?
to buy with all those treasuries? You think that was a bad decision?
It was not smart for those banks to buy out long-term treasuries. I don't know if they thought, like, I get they got to make money, right? But does it need to be for a 10-year treasury or something? No. I mean,
like a 2-year thing would have been nice.
Or okay, how about this? Yeah, a 2-year would have been nice. Or if you're going to buy 10-year treasuries and you're going to lock up money for an extended period of time, do that for a small portion of your assets. You need to be somewhat liquid. So if you're putting a huge majority of your money, like some of these, we're going to go through the debt to equity or liquidity ratios. But if we're talking about buying long-term, locking up your money in long-term assets, you need to have a larger percentage of your assets being liquid assets. So, okay, let's start with this. So if we look at European banks like Credit Suisse, I've seen that their liquidity ratios, meaning how much they have in cash at the bank, is anywhere from 25 up to 40% for some of these banks. Then we come to America, and in America we see companies like, I believe at the very top is, I forgot what it was. I know, Citibank. I believe Citibank is at the top with 24% of their assets in cash. Then we have J.P. Morgan Chase at 23%. There's some other companies in there. I think the banks I bought in this whole crisis was Bank of America and U.S. Bank. Their liquidity ratios are sitting at about 9 or 10%. As for SVB was about a 7% ratio. So if a 7% ratio is enough to go under, then 9 or 10% is getting pretty close to that. To make things even more scary, the smaller community banks around here, I've seen their numbers anywhere from 1% to 5%. So if we're talking about these banks only have 1% in cash or liquid assets, that's a huge problem. That's not going to take many people to start a huge crisis there.
Yeah.
And then I watched an interview with Janet Yellen, who works in the Treasury Department, and she said they are not going to be concerned. They're not going to. She doesn't expect the government to backstop. Now, to preface this, I think she doesn't have the greatest reputation as sticking to her word, because I think there's been lots of times in the last couple of years when she's completely 180'd and changed her mind, or whatever she said was going to happen, the complete opposite happens in regards to the Fed or.
She sounds like a politician.
Right. It's kind of like that. But it's not only about lying. It's about it could also just be you're bad at predicting things. So it goes along the lines like that. But getting back to what she said is she expects the bigger banks like Chase and Bank of America they're more likely to be supported by the government and get the support they need to backstop in order to prevent a huge crisis, because then we'd be back like in a 2007, 2008 financial crisis where it's like, okay, is the whole system going to melt down? And that makes sense. I get that. But I also think just as much as they are more important to the country and the whole economy, they also have higher liquidity ratios. As for the smaller banks, she said they don't expect the government to backstop the community banks. The problem with that is, yes, I understand they're not going to have, if a super small chain of banks in Northwest Indiana goes under, then, or let's say they have a problem getting money back to their people, well, that's not going to cause a huge financial crisis across the whole country. But the problem with those banks is they have, how I said, they have very low liquidity ratios. They're only sitting at 1% or 3%. So they are going to have a tougher time. So I mean, it's the whole situation is not entirely fair, and
I kind of feel bad for people who have bonds too.
yeah,
hmm
that's another way to look at this too. Yeah, and that's why people are trying to they want the Fed to put rates down, but the Fed is still sticking to their agenda of they want inflation down. They want inflation to 2%, not 6%. So I mean, the Fed is in a tough spot right now.
Yeah, they are. Yeah, they
The
are.
Fed is in a tough spot.
But yeah, I don't know. I don't know
The Fed is either going to have to, if they keep raising rates.
because this banking crisis is not going to be over in 2 weeks.
No, it's not.
It's not. It's going to be more banks that's going down. It's going to be
Unless they lower interest rates. If they do a huge cut all the way down to 2%, 1%, then that'll take care of the problem. Those banks can get their money back. That's not a huge issue. But if you do that, then inflation. There's a great. People are still spending money. So inflation's at 6% right now. If they cut rates by 80% or 70%, inflation's going way back up past 6%. It's going 8, 9, 10, 11, 12%. So they got a huge problem, but they're sticking to their previous thing of they want to fix inflation. So let them fix that first. Personally, I think I like having higher interest rates. I think it's a better situation to have to push people into, instead of saying we are going to allow people to get loans out and borrow money super easy without having to pay back interest. I think it's a more dangerous environment. I think it's safer to have it how it is now, where people are not borrowing so much money, but in fact you are getting paid. You can earn interest when you are saving your money. I think that's a better way to have the economy sitting in that sort of position, because it rewards the people who want to save money, and it penalizes people who want to borrow more money. And 2 years ago, we had the complete opposite. You got penalized if you saved, and you got rewarded for borrowing. So I like it better how it is now.
Yep. So you got anything else to add?
In regards to that, no. I think all I'm hoping for is that let the Fed keep these rates, let inflation come down over the next couple months, then maybe at the end of this year going into 2024, maybe they lower rates, and hopefully this banking crisis doesn't get a whole lot worse and destroy everything. But
I think it's going to get worse.
It could get worse.
Well, when we end this segment, while we're ending this now, I will say I do think it's going to be getting worse. But people, please don't get too fearful, scared. Don't get too scared about it.
I think the thing is there's a great chance it does get worse. Maybe another bank goes under. And this is going to make it harder, because we saw with one of those other banks going under, they took $30 billion from a group of all the big banks to donate to the smaller bank. So even if, let's say, things do get worse, it also is going to come back to, is the government going to backstop it? But then guess what? What did we just talk about? The government has their own problems with the debt ceiling. It's not like they're in a great. It's not like they're some like almighty power that can fix everything right now. So I don't know. It's tough. It's everybody's under pressure right now, and I'm just I mean, I think normally you can. I think even when things get tough, and even if the government's under pressure with debt, the banks are under pressure, the consumer is under pressure. You got inflation, all this stuff. I think that they normally, especially nowadays, they will come up with something. They'll come up with some plan or some debt, something to come up with where they'll fix it. I don't think they're going to put us through a huge recession. I don't think. I mean, right now I think times are hard enough. I don't think they're going to push us through a whole thing. So I don't know. I mean, I don't know. It's tough to say. I think the government would give you back. I think they're taking measures to make sure people don't lose their money, because I mean the rule is the FDIC insures people up to $250,000 in their account.
Yeah.
So I think that's enough to. I think the government's gonna help fix that, even if it means pushing the debt ceiling up or whatever they got to do. So, yeah.
Yep. And now that concludes the first quarter of 2023. Uh, but yeah, like I was saying, the first quarter just ended. Today is April 1st that we're recording. Happy April Fool's Day to everyone from the past, shall we say?
From the past.
Well,
I hope you had a good April Fool's Day.
Yeah, the episode has already passed for people live on TikTok. Hey there, happy April Fool's Day to you. But real quick, you want to do like this is the first quarter wrap of the year, shall you say? What do you think the earnings report will look like for some big companies such as Apple, Amazon, things like that? I actually think it's going to be all green and positive for big companies.
Me too. I think even though we got times were tough, I think 2022. I think people were analysts and stuff. I think they all these stocks went down. I think they had very low expectations. I think people thought we're going to be in a severe recession and all this stuff. But this is why companies right now we're going to get into companies that are laying off people, cutting expenses. Yeah. I think when they switch that, when all these CEOs and these companies switch their what's the word? Their agenda to cutting costs, making the company more efficient, making it more profitable. Disney is a big story right now with the CEO coming back, trying to fix things. And yeah, of course, all the companies, the Shopify, Coinbase, the Twitter, all these other tech companies who are also laying off people, that's going to be a major help to their bottom line. That's going to cut lots of expenses. And I think most of these companies by now are probably taking more conservative routes. We saw Meta for an extended period of time. We're saying we're going to spend 180. What they said, $80 billion or $100 billion on the metaverse, and we're researching this. We're going to develop this new technology. Well, they're cutting back. The last couple in this first quarter, Mark Zuckerberg kind of changed his
thinking.
Yeah, changed his thinking, changed the way he made things sound. He said no. He said now we're going for efficiency and profitability. So, yeah, they fired all those people they didn't need. They what else?
And not only them too. The entire overall tech industry landscape has just about changed these past couple of weeks because of these layoffs. But like you were saying, I think with the pandemic happened and a lot more people were at home.
Yeah.
There was a lot more need for people in the tech industry, such as those companies, such as Meta, those different companies, for them to hire more people. And even with Amazon too, they brought. With so many people wanting stuff shipped to their houses, they bought a whole bunch of different locations. And now those locations are now closing because the demand isn't there as what it once was in 2020.
Yeah, I actually saw there's other places shutting down locations too. But Meta, I heard Disney is cutting back on their they hired a bunch of people to dedicate for the metaverse and stuff. Yeah. So that's even
the metaverse stuff too.
Yeah, so that's backtracking too. The metaverse, all the stuff that was like, oh, this might be a huge thing in the future, or this is our next thing we're developing to throw money at, and hopefully it pays off. All that stuff is coming back. How I said, they're becoming more conservative now because things are tougher, things are rough. So
I think a lot of companies, even like us, with the GameStop stuff, they saw something make money for us and go big and go huge so fast. I think a lot of companies try to go that route a little bit too. Like,
they did.
Maybe they see the metaverse is going to go up. Let me try to hurry up and throw something at it, see if it sticks.
Well, okay, that's interesting. That's interesting because I just watched a video on YouTube showing how you should avoid the companies, or you should avoid these investments where you pretty much have phases of a new hot buzzword that comes out for a quarter or a couple quarters. And what that does is, how you just said, as many companies, so many companies are going to jump on that, even if it has nothing to do with their company, even if they don't even really know how it works or how it has anything to do with their business. So there was a bunch of examples in the video, but they went back to, like, right now it's AI, okay? And I guess the debate for these buzzwords is it real? Is it real? Is it actually going to have a positive effect going forward, or is this just a fake temporary buzzword? So,
but still, even if it doesn't go forward, a lot of companies are looking at, if we can make money
in the short term
for 6 months.
Yeah.
Is that good for us?
Yeah.
Or is it,
of course it's good if they're making money. But
but like saying, what are the pros and cons? And making money for those 6 months might outweigh the cons that might
in the long term.
Yeah.
Yeah. So right now, our buzzword's AI. Okay.
It was an NFT.
Well, we're not there yet. That was further back.
Yeah.
Before AI, probably 2022, it was the metaverse, right? 2021 was NFTs, crypto, Coinbase, all that stuff, right? And you could keep going further back and back. You can go all the way to the internet because that's how we got our huge recession, our huge all those companies went bankrupt in 2001, 2002 because they did the same thing. It was all you're investing in a story. You're investing in a hope and a story and an imaginary vision, right? It's not money. It's not money, it's not profits, it's not a tangible asset. So you can go all the way back to the internet and say, okay, look at all these companies that failed because they had these huge valuations, they weren't actually making money. Well, the internet turned out to be a huge successful thing. A few companies were hugely successful. Okay, look at Google. They were around at that time. They made it through, and it's a huge win. But what about 2020 and when Bitcoin went to, when I don't know when Bitcoin went to 60,000, 2020 or 2021, but all the NFTs came out. All that stuff was super hot. We talked about on this show how companies that had nothing to do with crypto or blockchain, every company was trying to get involved and put that in their earnings presentations and everything. So did that really amount to anything? No. So far that has crashed, right? Bitcoin went back to 18,000 or whatever it did. So, and a lot of these cryptos went under, the NFT projects, a lot of those went under. So that hasn't amounted to much. Then we have the metaverse. That's also hasn't really gone anywhere. We don't really hear about that too much anymore, right? Now it's about artificial intelligence. AI is interesting though because the AI thing might it's still a buzzword, but it might actually
stay.
It might stay, and it might be something where in the next couple of years these companies are making more money. I mean, we're already seeing people lose their jobs or these companies are becoming more productive, more automated. So it's already kind of working. But yeah, these companies might be able to they're gonna fire people, lower expenses, and become more productive, become more profitable. So yeah, I mean AI might be a different story with this.
All right, so to the next topic now, y'all. We brought up interest rates already, right?
Yeah.
Okay. The Hindenburg Report. I don't know.
Wait.
I think it's spelled B-U-R-G. B-U-R-G. Yeah, of course. I don't know. But Block. Well, the Hindenburg Report, like you were saying, is they go through a full report of different companies, like 100, 200-page reports for each.
Yeah, they're huge.
For a whole bunch
They've
of different
been working
companies.
on this for over 2 years, it said.
Mm-hmm. And then one particular company, I think you may have the hard article up, they brought up is one of our favorite companies as well, is Block.
How did you spell it? With a U?
Yeah.
You're right.
Told you.
Okay.
Hindenburg Research, actually.
Wow, it says they only have 9 employees.
Huh.
It's a small company.
They did 200 pages worth of work.
Mm-hmm.
That's a lot of stuff.
Yeah, it is.
Yeah, but like I was saying, one company, Block. What were they saying about it?
Block is the big. This one has all the attention on it as of March 23rd. So this is a little over a week old. And Block dropped a good 10% at least when this news came out, which makes total sense because I have way less respect for this company. Guess what Kathy Wood did? She bought a bunch of shares when this happened.
God bless her.
So there is a ton of stuff here. But if we're going to do a quick summary, too bad I can't just put all this in ChatGPT and it can summarize it for me.
I know.
But
just do like 2 objectives about it.
But
overall, one Cash App is bad because a lot of criminals use it.
Yeah, right. That's a big part. The title is How Inflated User Metrics and Frictionless Fraud Enabled Insiders to Cash Out Over $1 billion. Right? So the other thing is I've always liked Jack Dorsey. I've always kind of looked at him like a second Elon Musk or something. Like he works with a lot of companies. I don't know. I've always looked at him in a positive way where I'd be happy to invest in a company that he's running. But now I think my opinion may have changed. So let's just go over some basic things here. Let's start with the fact that based off of the interviews with former employees, they said about around half of the users or the accounts, are fake or were duplicates from one person. So one of the things they said, is they don't ban people from using their service. All they'll do is they'll shut down the account, and then people will make additional accounts.
Yeah.
They also tested it out by they ordered a payment card in the name of Donald Trump and an Elon Musk, stuff like that. They gave a couple examples of like Block paid somebody to make a song about Cash App or something, and then that guy went to jail. One guy went to jail because of the COVID fraud thing, where people were getting money from the COVID relief program, but it was they weren't supposed to get it. They were getting more than they deserved or whatever. And there's other things. They talk about a lot how it's involved with gangs and stuff. They said there's a gang in Baltimore or whatever that
Cash App gang?
it's called the Cash App gang, and they got in trouble for distribution of fentanyl. There's other, so it's the fake accounts, it's the they don't really do much background checking for a lot of this stuff. I think you don't have to link up a lot of information. It's very easy to go, the problem is with traditional banks, you have to they take more information from you. So if you're a drug dealer, you don't get to move money that easily. Cash App is great if you're a drug dealer because you can move money pretty easily. So that's where they're kind of, what's the word here? Criticizing Block. And
okay, well, what in your opinion, while reading it, was like the biggest red flag for you? Like, what was like you said, you got a little bit less respect for the company now.
Yeah.
Was that like the main factor?
It's a combination of things. I mean, whether it's in rap songs or whether there's a gang named after it, like, okay, even if drug deal, I mean, they said the same thing about Bitcoin. When we talked about Bitcoin, Elon Musk said, oh, well, it's mainly used for criminal activities and stuff. Okay, that's a different story. That doesn't, I mean, that just because a criminal uses it doesn't mean we're just not going to use that anymore. So that's not a great example.
Criminals eat McDonald's.
Yeah, exactly. Okay. So just because a criminal drives a certain type of car doesn't mean that that company's not gonna be successful. Okay, that doesn't make sense. So that's just like a little add-on bonus for entertainment, I think. But part of what I don't like too is I don't like the whole like executives like almost lying, or like they're saying, because part of my I made videos on this before, like Kathy Wood would point out and be like, yeah, Venmo and Square and Cash App, they're growing users faster than it's outpacing JP Morgan, right? Like they said, oh, we have 60, 70, 80 million users on Cash App now. Well, guess what? If half those accounts are duplicates or fake or whatever, well, that's a different story. This company should not be valued at where it is. So they give different examples of how, I don't know, there's different stuff where it's very deceiving. It's almost like they're lying, and in the meantime, they're making billions of dollars, right? They're getting all this money invested, so that doesn't look good. The other thing they brought up, Block's $29 billion deal to acquire a buy now, pay later service, Afterpay. Well,
Afterpay is under Block?
They bought it. For $29 billion, that's a lot of money.
That is a lot of money.
How long is it going to take for them to make that money back from that investment?
That's actually a lot of money.
I'll be surprised if it happens during my lifetime, because
I was thinking maybe like $5 billion.
Yeah, you would think. But guess what? They bought that when things were still. That was towards the end, but that was when things were still inflated just a bit.
Yeah.
So, okay, Congress passed a law that legally caps interchange fees charged by banks that have over $10 billion. Despite Block having $31 billion in assets, Block can avoid these regulations by routing payments through a small bank and gouging merchants with elevated fees. So it's stuff like that. It looks like they're having problems with Afterpay too. Talks about their competitors, Zelle, Venmo, PayPal, blah, blah, blah.
Yeah,
and it says all during this, Jack Dorsey amassed a $5 billion fortune. So, I don't know. It's
God bless Jack.
This just kind of supports more so my thesis of why I should not have invested in those Kathy Wood stocks. And even if this report didn't come out, it still doesn't change. I mean, I still can look at some of their metrics and say, like, yeah, this is overvalued. This is deceiving. This is whatever. So What you gonna do? I mean, I as long as normally I'm not a fan of like bearish investors or people who are always buying put options or short sellers and stuff. But if it's a company like this and they actually put out worthwhile data and they do they do good research, then that's a different story. I'm happy they did this because this type of stuff should be done. So
Well, that's another tip in general too. When you get in the stock, make sure to look at do your research. Do your
yeah,
research.
and it's you're if companies like this don't put out a report like this, there's a lot of information here you probably would not have known because they've been doing this investigation for over 2 years now. So sometimes you can't always tell. But what you can kind of do is you can kind of follow the guidelines or the philosophy of like if a company or a person is going to cut corners and you catch them lying once or twice or deceiving once or twice, there's a good chance that they're doing that on a mass scale and they're doing that with everything else in the company. So, you can normally get an idea just by looking at simple things like their metrics and stuff.
Yep. Well, like I said, shout out to Hindenburg Research for that.
Shout out.
Shout out to them on that one. Now for the next topic, we already talked about Amazon, but Amazon will soon be releasing an NFT marketplace. We also brought up NFTs, so
we also brought up NFTs.
And NFTs kind of been going down, way down. Actually, no one brings it up.
Yeah,
I bet. What's that? Like 6 months ago or something like that? Not a little bit longer.
At least.
Like an NFT would be trending every day. It'd be a different
like a year ago.
It'd be like a different article about it every single year. So the overall NFT landscape is down a lot. So do you think Amazon with this new marketplace going to somehow revive the industry somehow or no?
I think if anybody's going to do it, Amazon is going to be one of the best people you can have try this. It's all about the ecosystem. It's all about how many users and how much attention you have. If you have the most attention, you are the most valuable entity. So Amazon's got some of the most attention on the planet than any other company. So yeah, there's a good chance that they spark some more interest in NFTs. NFTs goes with interest in crypto as well. And what are we seeing? We're seeing interest in Bitcoin a little bit more recently. It's up 72% in the last 3 months. And that has to do with the whole banking and interest rate thing we talked about as far as where to store your money and if it's safe or not. So that's why Bitcoin's having a little bit of a hot run right now.
Yeah.
But I don't know. We will see. I don't know if Amazon is enough. I mean, if anyone can do it, it's probably Amazon. It's going to help a little bit for the NFT market, but is it enough to, put it back on the map, make it successful, and make it keep growing? I don't know. It's still up in the air here.
All right, and for Bitcoin, it's up 72% in the last 3 months. It's going back to the moon? You think it's going back to the $56
might get to
range?
outer space. I don't know if it'll get to the moon.
It might just barely pass.
It'll get in the atmosphere somewhere.
Well, what's that? The stratosphere layer?
Yeah. It'll get right above the airplanes, and then I don't know.
It's crazy how we used to have discussion like, oh, is Bitcoin going to take over as a new dollar, yada, yada, yada. And it's,
Yeah, I know. I don't know.
Life is funny like that.
Yeah, I don't know if I'm just about to break even on my Bitcoin. So
there you go.
That's where I'm at.
Round of applause.
I'm right at that a little over 30,000.
Break even is the goal.
Yeah, no, it's not. Right over that.
Well, now it is.
Yeah, now it is. Right over that 30,000 level. Yeah, I mean, I don't know. I'm just glad I don't have. I don't want to have a huge position in Bitcoin. I would like to keep that as a 1% of my portfolio. So that's how I feel about that.
All right, so I think we're almost heading up to an hour on the show. So last segment here, I want to talk about Kohl's and Big Lots. First, let's give a round of applause for Kohl's. I'm a big fan of Kohl's. Shop there a lot. Shout out to Kohl's Cash as well. But, I do want to say the stock has been going up, but I want to give the props.
What stock?
Kohl's.
It has?
Yeah, has it? It said it got a big surge on Thursday.
You better double check that.
Larry said a big surge on Thursday.
Look at the chart.
It was climbing on Thursday. I'll check it real quick.
That might be fake news. Look up the chart.
That's fake news, but I do want to say shout out to Kohl's because look at all the other stores, all the competition. Different stores like JCPenney's, Macy's. A lot of those stores are closing down and they're not looking up.
Macy's is?
Well, not Macy's, but, different type of stores like that.
Sears and Carson's.
Yeah. Sears, Carson, there you go.
Carson.
They're all gone, but hey, Kohl's, still there.
Well, yeah. I mean, is that a good thing or a bad thing?
I don't know. Who knows? But actually, yeah, they went up. Huge jump on Thursday
Okay.
from
Are
22 to
you looking at like
23.
are you looking at the 1 week chart or something?
Yes, the 1 day chart.
Okay, expand that out.
I know. They're going. They're actually down. Yeah.
Okay, expand it more.
I'm doing this on my phone. It's kind of hard to see. I can't do it sideways. Yeah, they're down.
Okay, how much?
65%,
Okay,
62%.
that's more like it. So, um, yeah, I bought Kohl's because
Why did you buy it? Did you want so it can buy low, sell even lower? The Kathy
that's
Woods,
very funny.
the Kathy Woods
Um,
way.
okay, so I have my primary reason for buying this, which has to do with the Benjamin Graham method. If you don't know who Benjamin Graham is, it's who Warren Buffett learned how to invest from. Okay, from the 50s, I believe it started. That's number one. Okay, it has to do with their balance sheet and how much they have in equity compared to what the company is trading at. It'd be like if I said I have a jar right here with $5 in it.
You don't have a jar with $5.
Let's say I had a jar right here, and
But you don't have. Oh, okay,
it's a analogy.
I got you.
Let's say I had a jar right here, and I said, okay, there's $1,000 in here. I'll sell you this jar for $800. Would
Okay.
you buy the jar?
Yes.
You probably buy the jar because there's 1,000 in it. That's all the concept is. But that's what the concept is. Then, now I'm not saying this should guide your investing decisions, but it is awfully nice when you scroll down and you see that Kohl's is paying a 10% dividend, right? That also is very nice to look at. So that was a bit intriguing. Then
10% dividend, you say? I'm buying it on Monday.
Then, I mean, the important question here you need to ask yourself is, well, of course, I can run through the metrics like return on invested capital, profit margin, all the investor stuff. But you also need to ask yourself a realistic, real-world question of, is the company going to go out of business? Are the stores busy? Do customers like shopping here? What's their satisfaction rate? What does Josh think of Kohl's Cash? Stuff like that. You need to ask yourself that, because that is information that's going to tell you about the company you're not going to get from looking at their financial reports. So that's why I want to get Josh's opinion on stuff like this, because I asked my mom, she had good things to say, but I don't have a great gauge on. I don't go to Kohl's that often, so I don't know if are they going to turn into a Sears or a Carson's, or are they going to stay like a Nordstrom's or something else that stays up and successful?
I think another neat thing that Kohl's did was they turned a lot of locations to like an Amazon job location.
Oh, with the hub thing.
Yeah, the
You're
Amazon
right.
hub. So yeah.
Well, good. I'm glad you brought that up because I didn't think about that. So, I think Kohl's has a strong, from what I've seen and heard, and when you go past Kohl's, it's normally busy. People love the Kohl's Cash thing.
Big fan over here.
Yeah. I kind of look at the similar companies going out of business. If you want to be bullish, you could say they went out of business. Kohl's survived. Obviously, Kohl's is stronger. They acquired those customers that used to go to those other stores. Now Kohl's has them. It narrows down the industry a little bit with fewer competitors. That's one way to look at it. Another way to look at it is to say, well, hey, if Carson's and Sears went out of business, and Kohl's is pretty much doing the same thing, then why can't Kohl's go under? Why wouldn't Amazon just eliminate them out of the picture too? But I don't know. Are people happy going to Kohl's more so than shopping on Amazon? I don't know. So hopefully Kohl's is one of those examples.
They will be an example.
But regardless of that or not, that was not the main thing of my thesis. If this company was not trading below book value, equity, their amount of equity, I would not have bought this. So they have $2.7 billion of equity on the balance sheet. Or wait. Yeah. 2.7. I got the number switched up. It was either 3.5 billion or 2.7 billion. The point is the company's trading at like 2.4 billion or something. It's trading below book value. So even if they went out of business all of a sudden in the next couple months, and they're like, okay, we're shutting down stores, we're putting up all our inventory for 50% off, and this and that. Well, I would pretty much the shares should sell for. The shares should sell for exactly what they're at now, right around $25, $26 or whatever. So that's the way I look at it. I'm also kind of testing out this method just to see if this actually, how this plays out. Because if you're buying these, if the Benjamin Graham method really works out, where we did this a long time ago with that real estate stock. What's the stock that was $7? That you pointed it out. You pointed it out to me. The one you found on Twitter years ago.
Years ago?
At
I
least.
can't remember.
You pointed out to me. You found it on Twitter, and it was $7 or $8. I think we both bought it, and I made money in a quick amount of time, and I gave you commission on it too.
Oh, I can't remember.
Remember? The company.
I don't know what you're talking about.
It was a real estate company that it was like not EPD, EPG or something like that. The company, we talked about this when
that was a while ago. That was about 2 years ago.
Probably close to 2 years. The company pretty much they were a real estate company for prisons. And the point was their equity on their balance sheet was worth more than the valuation. So I bought it, turned out great. Within like a month or two we made some money. We made 20% or 30%. But the question is, when the company is trading below book value, how long does it trade below book value before it goes back up to its thing and you end up making money? So if I hold Kohl's, now the other stock I did this with was Big Lots. That's the other one on this list. Big Lots is the same story. I think Big Lots is actually an inferior store to Kohl's. I think Kohl's has a better chance of sticking around. Big Lots is like a little bit more junkier, but it's the same thing with the balance sheet. And Big Lots also, not only do they have, it's undervalued, they also have a huge dividend, and they have a share buyback program. So there's so many things pushing. I understand people might say that store sucks, they're going out of business, they're shutting down, they sell junk, whatever. Some of that might be true, but they have so many things pushing them in a positive direction. They're buying back so many shares, that's going to push the price up. I'm getting a dividend to help cushion all this. And so Big Lots is another one too. But I'm just curious to see if this actually plays out like that, where like how long does it stay below book value and when does it pop up? So we'll see what happens.
Beautiful, beautiful. Well, I think that's just it. That is it for this episode. Yeah. I think this was a good episode.
It was solid.
Especially for all the rust that we had. It's been, like 2 years since we did an episode.
Yep.
But thank you all for tuning in for episode 47. Shout out to all the people live on TikTok, if there are any people live on TikTok. Thank you all for tuning in for episode 47 of Stock Talk with Josh and
Niko.
Y'all have a good one out there. Stay safe out there and to greener days ahead. Bye-bye.